What's up traders, Tom here with another video. Today we are discussing cryptocurrencies. More importantly, Bitcoin and the 2020 halving. Will it go to the moon or will history repeat just like in 2016? Stay tuned. I would just like to remind everybody that if you enjoy our content, please hit that subscribe button and the alert bell to receive more daily content on the financial markets. So as many of you may know, cryptocurrency investors are getting ready for the hotly anticipated Bitcoin halving this month, which will now see the number of new Bitcoins being created cut in half. Let's take a look at what it actually means for Bitcoin moving forward. So here is a chart in terms of how many Bitcoins are actually created per hour and per minute from a monetary standpoint. As you can see, per block, it used to be 12.5 BTC per block. Now that will change in 2020 to 6.25 BTC per block. And the difference in money is quite astounding. Basically, if Bitcoin has a value of 8,000 US dollars, it's going from $600,000 created per hour to $300,000 created per hour. And these events happen every 4 years. And the next one, if the price was still at the same price, would only be $150,000 created per hour. So it's a big deal in terms of the way that Bitcoin is seen from a scarcity standpoint and a supply-demand standpoint. Bitcoin was originally designed with the idea of retaining monetary value. Each halving will pretty much sharply reduce the level of inflation rate for Bitcoins, and the upcoming May 2020 halving is expected to drop inflation from about 1.8% to around 1.45% inflation rate. This inflation rate is essentially equivalent to the inflation rate of gold, which is pretty exciting for those that have advocated for Bitcoin as the digital gold based on its inflation rate and scarcity. So what can we learn about the history of these events and possibly recognize opportunity to get into Bitcoin or potentially to get out of Bitcoin over this event period? Well, let's go back to think about each one of the events that have occurred. So the first halving event occurred in November 2012. And at that stage, Bitcoin was still relatively in its infancy. However, price rallied from just under $4 at the start of 2012 to reach around $13 by the year end at that period. In the second halving, which happened in July 2016, many interesting things started to happen. So let's take a look at the lead up to the 2016 halving, as I think that's when Bitcoin was already relatively mainstream and there was a big movement coming into it. So here we are in May 2016, and we can see that the price steadily increased over time, reaching around $780. This was then followed by a steep sell-off all the way back down to around $500. And the crypto halving event actually happened here on the 9th. So the lead up was hotly anticipated, and we've seen a similar thing happen at the start of this year and then been interrupted, of course, by the current crisis that has enveloped the world. So on the 9th of July 2016, the Bitcoin halving event occurred, and price remained relatively stable after that, before selling off heavily all the way back down to previous resistance, which became support. And this happened around the 2nd of August, so 1 to 1.5 months after the event. I believe something similar is going to happen this time. Whenever you see these types of events, it's what we call buy the rumor, sell the fact. It happens on Wall Street all of the time, and it happens generally in lead up of hotly anticipated news. Happened on Amazon the other day, where everyone expected Amazon to absolutely blitz it, and they did, but they didn't meet everyone's expectations. And of course, they are burning cash. It happens in collectibles markets. If you look at the latest Marvel film that's coming out, and let's say it has Spider-Man in it, and you look at the collecting of comic books on a smaller scale, those actual comic books go up in the lead up of the hotly anticipated film and then sell off straight after that film, even if it's good, because the hype dies down. So if you're a Bitcoin investor, you need to think about these types of history, because Over the years, Bitcoin has been known to be a very hyped market. The type of investors that are in Bitcoin often can get quite hyped up, and there's a lot of what we call, I guess, shilling that does happen in this market. So you must be very, very careful with what you do. Even when I was coming up with this idea for this actual video, Bitcoin actually took a massive dive during my recording period. It went from around $10,000, which is a strong psychological resistance point, down all the way to 8,100, and then back up to 8,800, which is where it is now trading as of this video. If we take a look at the actual resistance points, we can notice that effectively around this 10,000 to 10,400, the price has remained relatively stable over a period of time. If we zoom that out, look how well respected the 10,000 has been since the original run up to almost $20,000 back in 2017. So 10,000 has always been a great psychological number, and it makes sense for price to rise into this event. So let's dive into this a little bit further and talk about some of the things that we've seen happen and some of the things that are repeating. So one clear one is that the market was moving up into this event before the current crisis pushed the market right back down, back below 5,000. Then we've had a second rally with everyone almost on the internet talking about Bitcoin, talking about the halving event, talking about how amazing it is for Bitcoin. So volume is spiking. We can see this just below here. Volume has increased steadily since the March lows, and there's been a huge amount of buying pressure coming into the market. If we take a look here, we can see even at this stage, 59 million volume units in terms of yesterday, and the volume has been steadily increasing throughout April into May ahead of the event. I expect today to be even bigger volume by the time it's ended, and you will probably see even bigger volume coming into the market tomorrow. But as an investor, you need to be patient. So if we're looking at this from a perspective of what is going to happen in the future, we always want to look for key buy zones if we want to buy into this particular currency. Resistance at 10,000 would not be a buy zone that I would be looking at technically. What I would be looking at is either a pullback back into the 7,000 kind of area where it's found support before, or you would generally wait and see the market actually break to a new high, and you will inadvertently always usually get a second buy zone as the market breaks through, gets exhausted, and comes back and retests in what we call role reversal. This makes a ton of sense from this particular currency pair because previous resistance was being so strong that the market usually will come back and retest. So what you don't want to do as a trader is you never want to fall into the FOMO or the shilling effect or any of those types of things. You need to think, what are we going to do next, and think of it as a sound idea. Of course, in the thumbnail in this video, I put Buffett because he's well known to say that cryptocurrencies have no value. I don't believe they have no value. I think cryptocurrencies are an amazing technology, and I think the technology is here to stay, and we are in the infancy of this technology long term. If you think about where crypto is now to where the internet was during the 90s and 2000s, it's clear to see that this is the future technology of the world in terms of transactions. Will it be Bitcoin? Time will tell. But there will certainly be the technology of cryptocurrencies put into all of the things that we do in daily life to do with transactions. So I'll leave this question with you guys. Are you buying the FOMO, or are you going to be patient and wait for the opportunity to either buy at a lower price in the months preceding the event, or potentially wait for the strong movement up and then invest when the resistance is broken and the role reversal occurs? I'd just like to leave everybody with this idea. There is always a time and place for every asset class that you can invest in the world. Everything has its own day, and there's always an opportunity around the corner. So on this channel, I really don't want to just stick to one particular asset class because I think that everything has a time and everything has an opportunity. Hopefully you enjoyed this video. Make sure to give it a like, comment down below, and of course, subscribe and set those alerts for more daily content on all of the financial markets. Happy trading, everybody.